All right, what's going on, you guys? It's Royce Jacob. Welcome back to the channel. Welcome to part 2 of stocks that I'm personally keeping an eye on going into the month of June. This video is going to be focused around hedges. If you're not familiar with what a hedge is pretty much just a stock or a play that goes up in value when the equity markets, primarily talking about the S&P 500 and the Nasdaq, go down in value. So equities go down, hedges go up. If you have been tuned into the channel lately, then you would know that I have been and still am pretty suspect on the equity markets overall, primarily the high growth areas of the equity markets. And I do think that the equity indices like the S&P 500, like the Nasdaq, could very possibly see a pretty significant correction as we head into the summer for a multitude of fundamental reasons. I mean, the reopening is big. Investor sentiment overall is a big factor that's coming into my mind. Low volumes on the charts, which we will, of course, dive into, are a red flag in my eyes as well. The Bitcoin, the cryptocurrency markets being a precursor to the equity markets, primarily the tech sector, is a factor. I will jump into more of these, hopefully into more specifics. I'll do my best to do so, at least as we dive into the charts and just anything that comes to mind from a fundamental perspective, because there are a lot of fundamental stars misaligning right now, which do lead me to believe that more downside is ahead for the equity markets. So I will tie that in. I will tie some fundamentals into all the charts, all the technicals that we're covering today. But all that said, could I be wrong about this? Could the equity markets keep ripping? Absolutely. So things just seem a little overheated right now. I do think we'll see a pullback, but could plays as well, like the ones we covered in yesterday's video, could those high risk revolutionary plays and revolutionary sectors still do well even if the equity indices do see a pullback? Or if I'm wrong, the equity indices don't pull back, could those plays do well? Absolutely. So the market is just kind of in a questionable place right now in my mind, but I didn't feel like it would be responsible of me or even rational of me, to be honest, to just make yesterday's video about those hyper growth, very exciting plays without making without presenting to you guys the argument that I've been thinking about a lot, that I play personally in my own portfolio, as many of you guys, if you're part of the newsletter group, know. And I did feel like I wanted to give you guys both sides of the coin and both scenarios that I see potentially playing out over the course of the summer, which are a very stark contrast. But again, it's a weird market right now, and I just want to give you guys some of my thoughts around the overall market environment as we head into what is historically a pretty bad season for the equity markets in the summer. Okay, so let's get into it. As always, we'll go over all the names we're going to be discussing today, and then we'll dive into each one individually, kicking it off with the SPX, or the S&P 500 index. This is the first equity indice that we're going to be looking at. I know, you guys, this isn't really a stock, this isn't really a hedge, but below the S&P, below the NDAQ that we'll be looking at after the S&P, are bear ETFs. So if you ever heard of a bull ETF, which is pretty much if the S&P 500 goes up, this will go up 2 or 3x. The SPXU is a bear ETF. So it's obviously the exact opposite of that. So if the S&P 500 goes down, the SPXU bear ETF will go up in value, okay? So same for the Nasdaq. After the S&P, we will go to the Nasdaq. Obviously, the Nasdaq is a little more tech weighted, so it will be a little more volatile. And I'm actually even more bearish on the Nasdaq than the S&P, which you guys will understand why when we dive into the charts. The Nasdaq has sqqq, the triple Qs. Obviously, the bear ETF is going to be sqqq. And I do definitely think this one has potential, considering I do think that the Nasdaq will depreciate in price over the coming weeks. Okay, so sqqq. Then, of course, moving on to the VIX, the CBOE Volatility Index. This tracks volatility, as its name implies. So this is inversely correlated to the S&P, but more magnified. So if the S&P 500 starts to tank, the VIX will absolutely skyrocket, okay? Not even tank. If the S&P 500 shows signs of volatility to the downside, the VIX, considering it's been so slow, I do think will do very well. I don't trade the VIX. I do trade vixy. This is the ETF I trade to play the VIX, but it's a pretty similar thing. Again, similar to all these, it's just ETFs are going to be more volatile versions of the regular thing. After the hedges, those are the primary hedges I want to talk to you guys about today. After the hedges, I do want to jump into 2 commodities. The reason I want to talk about commodities in a video focused around hedges is because if tech does start to sell off, if the S&P, the Nasdaq does start to sell off, the thing is, the dollar is still weak overall. And if that capital is flowing out of hyper-growth, high-risk areas of the markets, it's still going to want to be put to work. It still wants money, still wants to make money. That's a law of nature right there. So money will have to flow somewhere. Capital will flow somewhere. It will not just go liquid. And plays like silver, AG is First Majestic Silver. This is a silver mining company. giving this to you guys right now. This is probably my single favorite silver mining company. I do have a few others that I like as well. AG is probably my favorite in the entire market. And then we'll talk about Gush, which is an oil and gas 2x bull ETF. So oil and gas may sound contradictory because I do really like EVs right now. I think the EV sector shows a lot of promise, especially if things do pick up again. But the thing is, we're reopening. More planes are flying everywhere. Here in Hawaii, it's busier than ever. You can't rent a car. Planes are full everywhere. And oil and gas, realistically, even though moving forward, things are going to get a lot more green, oil and gas is of higher demand than freaking ever, okay? So we'll cover Gush, cover AG. These are two plays that I do believe have a lot of promise in the commodities sector. And no, guys, my money is always where my mouth is. So these are all the names we're going to cover today. Before we do get into it, I want to read you guys just the beginning to this and kind of preface my general thoughts as well. So this is the beginning to the newsletter I released 2 days ago. There's just a few sentences here just to frame my thoughts. Risk on. Hyper-growth assets are popping on this green Wednesday in the markets. Crypto stocks are bouncing nicely, and EVs, electric vehicles, are leading the day in gains. It's exciting to see this kind of price action in many of the names we've covered for so long, but I remain cautious. Volumes are still low on almost everything, which is still caging the bull in me. I'm still sus on equity indices, which means I'm sus on the greater markets. That said, I do still think there could be a few winners in the mix. So I did say something similar to this in the portfolio, or in the video yesterday, you guys. I'm sorry. Again, you guys, there's always a bull market somewhere. So even if the greater equity markets are falling down, S&P, Nasdaq, Dow do see some depreciation, do see a corrective movement, there's still areas in the market that will do well. And that's why we're talking about hedges today. Again, yesterday, we're talking about the hyper growth stuff. There are honestly a few names, a few very exciting kind of small cap EV plays that I'm eyeballing very hard right now, that if I do get confirmation, that I actually have been loading up, shout out portfolio group, you guys know that I've been starting to dabble in, and I definitely will as I get more confirmation of direction. But there's a lot of exciting plays out there. I think EVs could be, the EV markets could be a great contender for that. Of course, cannabis, we got biotechs. There's always a bull market somewhere, you guys. So keep that in mind. And if you guys do want to know when I do pick up, when I go back on offense mode, when I get, how I'm trading the hedges too, of course, because I'm definitely hedged up right now. But when I go back on offense mode, what specific plays I want to get into personally, what I'm trading, why I'm trading it, check out Complete Portfolio Daily Newsletter. First link down in the description, which is complete breakdown, literally every single position of my entire portfolio. I do update that every single trading day during market hours. And with every update, I send out an email newsletter that looks like this. Scroll down to show you guys some of the charts in here, throw some charts in, throw some analyses in there, explain to you guys my thoughts, rationalize why I'm trading what I'm trading. Even if I'm not trading much, I'll still include some charts, talk to you guys about what I think is important in the market, give you guys some price targets of names that are prevalent in the or dominant, I should say, in the portfolio. Prevalent, I guess, works too. But $15 a month, first link down in the description. Really means a lot if you guys check it out. Put a lot of work into that, guys. So appreciate it. But if not, as always, no worries at all. Let's dive into the chart. So the S&P 500 did something today that was very telling of direction. Again, could I be wrong? This is all just my opinion, you guys. But on the charts, I'm just reading the tape right now. So S&P 500 or SPX, we will see volume. You can't see volume on this. I should have used the SPY to be honest, but this is where I had all my lines drawn, so I'm not going to do it. Nasdaq, we will be able to see volume, and I'll show you guys kind of this declining volume over the past few weeks, okay? So the SPX today, on the 4-hour candles, did just set a double top. You can see a top right here, May 25th, top right here, May 27th. Did double top on the short term. Kind of double bottomed right here, double topped on the short term. And something that I want to say right now, you guys, is you see this sideways price action that's going on. Where we're currently sitting is pretty much where we were in mid-April. So for the better part of a month and a half, we have been going virtually sideways. And right now I have the exact same thing. Like I just said in the beginning, the crypto markets tend to act as a precursor to hyper growth areas of the stock market. And I know you could say the SPX and the Nasdaq are not necessarily hyper growth. The Nasdaq, I guess, is more hyper growth, of course. But the crypto markets, just risk on areas of the markets, do act as a precursor to the equity markets themselves, to risk on areas of the equity markets, of course, okay? So from a technical perspective, the S&P 500 did top out today. The reason I brought Bitcoin up just now was because the feeling that I have right now, the fact that we're just going sideways, that you're seeing a decline in volume, is it's not the exact feeling. I was a little more confident in Bitcoin, but is a very, very similar feeling to the feeling that I had right as I was kind of saying Bitcoin was feeling very toppy. It looks like we're topping out, was when I was personally taking profits on Bitcoin right before that big dump that we saw like a week or two ago. Okay, so again, you guys, sideways price action, decline in volume, the reopening, everyone getting back out there, investors wanting to use their capital, the capital they've earned, to go out, to do stuff, to do exciting things, to be with your friends, to go grab some drinks, to go grab some Wagyu and sushi, you know the drill, you guys. But again, there's just a multitude of factors, and I'll just talk about the technicals, and now we can tie in some fundamentals along the way. But from a technical perspective, I'm sorry about my voice, you guys. I just recorded a video before this, and my voice is absolutely shot. So forgive me for that. I'll do my best. From a technical perspective, once again, the S&P 500 did set a double top in the short term on these 4 hours right here. You can see by this purple line. Zoom in. I mean, clean double top. This just does not look bullish to me. This does not look bullish. Volumes are declining once again. And I do think it's very likely, at the very least, that we come down to test this line of support on the S&P. If this happens by next week, by June 3rd, we do have a 3-day weekend coming up, you guys, so keep that in mind as well. We'll be doing a little Discord live this weekend going into the trading week. So check out the Discord link down below as well if you want to join the Waves fam for real. But I do think that at the very least, the S&P will come down to test this overall line of resistance. This is a very, very strong trend line dating all the way back to October. So touch point here, touch point here. This trend line is evidently in play. We almost came down to test it on May 19th, actually on my birthday, when I had hedges, and that was actually a good birthday present. But we almost came down to test it. We didn't quite do that, and I think that it needs to come down and test it at the very least. Do I think that'll be the end? No, because I do think we're going to set a lower low here. If we do set a lower low, if the S&P sees, I do have the price range right here from the current level. If the S&P does see over a 3.5% correction, I think it's very likely that we continue on to see almost a 5.25% exactly percent correction here. The reason this is my initial price target, and the reason I do think we'll at least come down here in a correction, is because this is the high only set on March 16th, so this wasn't even that long ago. This is the high prior to the current rally, the prior short to medium term rally that we are currently on. So high right here, around just under 4K. I do think it's very likely that S&P sees at least a 5.5% correction. Beyond that, if we continue to fall, these are the other levels I'm looking at. How likely do I think these are? Of course, you guys, you can use like this is technically a level, this is a level right here. So it's not just going to happen overnight, of course, but I do think it's likely, like worst case scenario, if the Fed does decide to raise rates, if capital starts going to work in recreation and not in the markets, if the dollar wants to be put to work, if the dollar goes up in value, then it's very likely to me that we will revert to the mean. And I've been saying this over the past couple of videos, guys. When we see crazy bull markets, when we start to see that correction, if support is broken, a lot of times you revert to the mean as the absolute floor. So is it possible for the S&P to reach $3,600? I think it's very possible for that to happen. And I do think a similar thing will happen in Nasdaq. So again, you guys, we'll of course cover this as the cookie and crumbles. Keep in mind, you guys, the markets are a crazy place right now, you guys. I've played a lot of crazy markets, but as far as the retail investor landscape, just the hype mania, what's going on with like AMC and stuff right now, it's very hard to track. Like the network effect that is happening in the markets right now is something that I've had, of course, experienced before, like the cannabis boom, the crypto boom of 2017, and of course 2021. Just hype rallies, the biotech boom of last year of 2020. It's just hard to read right now, considering we've just been ripping for so long that it feels toppy. So I'll call it there, you guys. I'm not going to cover the spxu. Again, you guys, if you're interested in that, there's multiple ETFs you can play. As bear ETFs you could play as hedges. I personally trade the spxu, okay? So that's the S&P. Let's move on to Nasdaq quick. Just try to make this one quick just because we spent, like, I pretty much gave you guys my fundamental, all the fundamental technicals, 50-50s there on the last chart. But Nasdaq pretty much doing the exact same thing. Pretty much, I mean, like you could say almost triple topping out right here, like not being able to break this area, not wanting to set a new all-time high above 166. Keep in mind, you can look at triple Qs. I'd look at the Nasdaq right here. So I do have the percentage drawdown, and I think it's very, very likely, considering the Nasdaq did technically break support, broke a very strong line of support beginning back at the beginning of March. So evident support here, broke below it, gap below it, came back up, tested previous support as new resistance, TA 101, and really struggling to regain that high, you guys. So I do think it's likely, again, the market, just looking at this, it just looks so overextended, and it just looks like we're due for a pullback. I know the infrastructure plan's coming out tomorrow as you guys are watching this, maybe the day that you guys are watching this, because I'm releasing this Thursday night, Hawaii time. You may watch this on Friday. Friday, we're supposed to see that infrastructure plan, what, $9 trillion, or not $9 trillion, $900 billion plus infrastructure plan. That is very, very bullish long term. and I do want to make it very clear, I should have said this in the last one, that I do think that the S&P 500 and the Nasdaq will close out the year of 2021 significantly higher than it is right now. But considering summer is historically bad, considering things look very overbought, considering things feel hot, and there's too much capital floating around in the ether, I do think it's likely that we do see a short-term pullback. Corrections are a healthy part of every bull market. We'll say that in every bull market, every crazy rally we see. And the Nasdaq is like a perfect example of that in my mind. So reverting to the mean once again, I think it's only fair considering the Nasdaq has officially broken trend, broken support, that we do see. And you could say like this is a little line of support here. So if we have a red day tomorrow, the Nasdaq, it's very likely the Nasdaq will ultimately come down and revert to the mean right here that acted as a very historical ceiling over the month of January all the way to like March. So for the better part of 2 months, this area right here around 1430, which would be just about 14% down from current levels, has acted as a very significant ceiling. And again, previous support, new resistance, previous ceiling, new floor. So I do think it's very, very likely that the Nasdaq does see, I would say like 70% chance, which I'll take those odds. Those are odds I'll take any day. 70 to 75% chance that the Nasdaq does see a pullback of about 13 to 15%. Okay. So that's the Nasdaq. The bear ETF I play for the Nasdaq is the sqqq. Moving on, VIX. So we'll take a quick look at the VIX. I'll just show you guys what the VIX is capable of and the crazy movements here. The VIX, back here played it so well. I was feeling very confident. I was like, this is finally it. But unfortunately, the VIX has gotten absolutely smoked over the past week or so. And it's at one of its lowest levels ever. So the VIX is currently at $16. Let's zoom out here. Let's go to the daily chart here just to show you guys kind of what the VIX can do. So this is what the VIX did back in March of 2020. I'm sorry, in February of 2020, going into March, of course, at the beginning of the pandemic, when we saw the Black Swan event, when every asset on the planet, aside from the US dollar and the VIX, fell off an absolute cliff. When the S&P 500, because once again, the VIX is inversely correlated. S&P goes up, VIX goes down, vice versa. When the S&P crashed, this is what the VIX did. The VIX went from current levels, where we're at right now, on February 20th, to a high of 85. So I'll just bring out a price range here for you guys quickly just to show what happens. It's almost completely unlikely in my opinion. I shouldn't say impossible, but almost impossible for this to happen again, considering this was an absolute Black Swan event. But the VIX appreciated over the course of that Black Swan by 410%. Okay, so I don't think this is going to happen again. I want to make that very clear, but I do think it's possible that the VIX can see a pretty significant move up if we do see even somewhat of a little crash, a little mini crash in the equity markets of the S&P 500, obviously. So using technicals here, technicals don't really work on the VIX that well, but I feel like it's fair if the equity markets pull back by mid-June that this trend line will come into play using this touch point here, this touch point here. If you do want to use technicals here, again, the S&P 500, just going off the S&P and playing the VIX that way is a lot more reliable, but if the VIX does really rip up, this line of resistance on the downtrend actually coincides nicely with this uptrend that we were in for a little bit here from mid-April to May, and those coincide exactly mid-June. That would take us to a $30 VIX. That's almost a 2x from here, and of course, that is very, very good news for vixy. So if the VIX can 2x, I do think vixy, which is the ETF I trade for, the VIX may 2x as well. Moving on, let's close it out with AG, First Majestic Silver, one of the most beautiful charts I've seen, like one of the most bullish charts I've seen. So let's zoom out here. I'll just show you guys briefly, and you guys will definitely understand why this is bullish. So First Majestic did just break a downtrend, did just break a short-term downtrend that it's been in since mid-February, broke out of that on May 18th, May 19th. Again, close to the B-Day. Love to see that. And we did break out, so we are in a technical short-term breakout. We have a very strong line of support here, so the downside is pretty mitigated. Even if we do come down more, it's not going to be that much. So from an asymmetric risk profile, this is a beautiful trade. Silver looks very good. I will be releasing a silver video right after this video, so stay tuned for that for an actual like silver spot analysis. Silver looks great right now. Again, especially going into the summer, if capital does flow out of plays like the S&P 500, like the equity markets, I do think silver, precious metals, commodities are a very, very strong contender to like Gush as well. So, I mean, if AG sees a breakout, if silver sees a breakout, which I do think is very possible, I think it's very possible for AG to set a new all-time high here because this line of resistance is so strong. Again, touch point here way back in March 2020. Touch point, touch point, touch point, touch point. This dictated perfectly the high that we saw in early February, that crazy Reddit short squeeze that AG got caught up in, and I love to see it because I've been holding AG for forever. And I think it's very likely that especially because Reddit's so strong right now, maybe we see another short squeeze. Maybe all the factors that I've been talking about complement that short squeeze, or maybe we don't see a short squeeze and just all the fundamentals do play in the favor of AG and silver. But AG looks beautiful on the charts. Again, broke out of this kind of, you could call it, I guess, a symmetrical pennant, but just out of the downtrend short term. Very strong line of support here. Very strong line of resistance on this overall uptrend, and this is undisputably still in an overall uptrend. Looks beautiful. Almost could say like a head and shoulders is playing out here, like inverse head and shoulders, shoulder, head, shoulder. Could come up to at least like 20 bucks here. And yeah, this is just a beautiful chart. I don't know if any of you guys can I don't know if anyone would really dispute the fact that this is a beautiful looking chart with a lot of potential. Okay, so that's AG. Let's close it out with another play that is a little newer to the portfolio, but looks very, very strong. Gush. So Gush is in a very similar, beautiful, like megaphone channel. This is a very strong, stark. Stark isn't really the right word there, but very strong megaphone channel. Again, megaphone just because it's going like that, obviously. So strong megaphone channel short term, has a strong line of support on the short term uptrend. And the upside here, kind of similar to AG, is very impressive. So touch point here, obviously touch point here over the course of the current uptrend would take us to a price target of mid-July. This is spanning a ways out. So mid-July, conservatively, I don't think it's likely that we just rip straight up to test this. But mid-July, let's just go like, yeah, mid-July. We'll just do mid-July. So July 14th. This could take us to $150 in Gush. How likely do I think this is? I don't know. But as I said in the beginning, oil is ripping right now. Love EVs. EVs are 100% the future. Sustainable energy, green, eco-friendly energy is inevitably the future. But that's the future. And right now, there's more oil being used than ever. Travel is going to be absolutely on fire. And the travel stocks too, reopening stocks, there's a bunch that I'm eyeballing. And if I do get confirmation of trend, if I stop feeling sus on the equity markets, trust me, I'm excited to be a bull again. Being a bear is not as fun. Playing hedges isn't as fun. It's funner being a bull, but I'm just being as rational as I possibly can. Again, I could be wrong, but I hope that my arguments have been somewhat sound for you guys. So please let me know in the comments down below what you think is going to play out over the course of the summer as we step into the summer. I believe the solstice is actually my mom's birthday on June 21st. So technically June 21st isn't in the summer. We're still in the pregame for summer. So please let me know down below, you guys, what you think will play out over the course of June. How do you think we'll close out? Again, we got a 3-day weekend ahead, so be prepared for that, you guys. Tomorrow will be volatile, whether it's green or red. I know futures are in the green right now, so a little sus on my hedges right now. This video could age very poorly over the short term, but I still stand by my fundamental argument. I still stand by my technical arguments, and I do still overall believe that it makes rational sense to see a correction over the course of June. At least by late June, we will start seeing a correction in the equity markets. Okay, so again, you guys, that's just my opinion. Please let me know down below what yours is. If you completely disagree with me, if you agree with me, why? And yeah, always love talking shop with you guys. Always love learning from you guys, most importantly. So I will catch you guys downstairs in the comments. And until next time, always remember, take action, make waves. Peace.